Greetings. Today's primary story is the fact that China has 24 different EV companies. And so the question is, why bring in Tesla at a very high price? As usual, we have our health tips. We also have a look today at sort of what to expect over the next few weeks from Tesla. There's a lot of action happening. In particular, we're focused today on the fact that Tesla is making a lot of moves to help with the end of the year production bump that we've all seen. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time on our channel, please take time to like and subscribe. If you're a repeat visitor, welcome back. Please also note, we want to thank all the Patreon supporters out there, and we have a link below if you'd like to assist. And we also welcome comments and suggestions about how to improve our channel at all times. So today's show is kind of strange because usually it's a US focused show, but we're kind of looking at what's going on in China with Tesla primarily. And so we have kind of 5 reasons why we believe the Chinese have decided to bend over backwards to get Tesla to come with manufacturing. Now, as you all may recall or already know, Tesla was in negotiations with China for 2 or 3 years to determine whether or not Tesla would move there. One of the primary sticking points was that China requires 50% ownership by a local partner, and Tesla wasn't going for that. And so Tesla ended up with the power to actually shift Chinese law from the ownership stakes that were previously found to be the norm into something different where Tesla can own itself in essence and doesn't have to have a 50% Chinese partner. So bottom line is that the Chinese not only changed rules, but they're pretty much putting up the cash necessary to build Gigafactory 3 that's being built currently. Now, by the way, it is being called Gigafactory 3, which implies that it's going to be both production and batteries. You know, Tesla has indicated that before the factory started, they indicated they would be doing batteries as well, but at this point, the primary focus is to have an assembly facility / manufacturing facility that supposedly will accommodate 250,000 vehicles in Shanghai, China. Now, what's fascinating about the circumstance right now is the fact that there are sort of 5 reasons why the Chinese chose to bring Tesla in. Sort of prior to getting to that, we were fascinated by the fact that there are actually 24 manufacturers that are indigenous Chinese companies that are EV manufacturers. And these companies primarily are concentrated with the 100-mile range batteries, and most of them are less than 3 years old. And the first of them, Nio, has now gone public in New York. But the other question that pops up is, now that one of them has gone public successfully, other than BYD, one of the other, let's say, 20 plus Chinese companies going to be going public. So it'll be interesting to see, you know, how this all shakes out and how they're all going to differentiate themselves from each other. As you also may recall, there's a rule when it comes to EVs in terms of the degree of interest that folks may have in the vehicles. The primary issue that folks have is that if you offer 100 miles of range, you have an interest by about 25% of the population. Once you get to 300 miles of range, now you have the interest of 75% of the population. So the first clue as to why China has decided to engage Tesla is the fact that they have the long-range batteries and demonstrated performance across all parts of China that show that they can handle the work well. And this brings us to our second issue, which is, as you may recall, there's a huge number of Chinese manufacturers that have been sued over the last several decades based on poor quality performance. So when a company is formed and starts producing vehicles in a 2 or 3 time horizon, they may be excellent quality, but it's hard to tell what that is. And consumers may or may not respond because they know about the quality issues that can result, in essence, junk being sold, and then a bunch of people getting horrible results in a number of different ways and therefore being very unhappy. So this is why in a place like China, premium brands like Daimler, Mercedes, BMW, etc., are all highly regarded, because that quality is long-term and well-known, and unknown when it comes to Chinese products, especially if they haven't been tested heavily by use in a marketplace. And Tesla enjoys that greatly. The third reason why we believe that Tesla was brought in is that China has an aggressive effort underway to transition into EVs from diesel, coal, and other methods. And the reason is because the pollution is deadly to large numbers of Chinese. And so there's a huge initiative afoot to really drive a process of transition to solar as well as electric as fast as possible. And so when you put the resources both of government dollars, government laws, and all the incentives that are associated, the ability of these folks to move quickly to get change is legendary. And there are metrics that suggest that China is rapidly moving towards eventually getting rid of internal combustion engines to reduce the degree of pollution that's being dealt with. The fourth reason why we believe that Tesla has been selected to come in this aggressive fashion is the fact that the Chinese don't have a lot of indigenous expertise at the top level in EVs, and wanted Tesla to help bring that expertise to the country. As you all know, most of the Asian countries, including China, have done a great job of, once they can see or monitor the manufacturing of certain entities that they're targeting, they will readily go ahead and copy that and infuse it into their own entities. So this creates an interesting challenge for Tesla, which is, to what degree do they equip the factories with things that they want their Chinese partners to replicate within their own plants as competitors or not? So this cat and mouse game is going to be interesting to watch how it breaks out. To date, it could, the way this has been playing out is that Tesla's made a lot of promises about installing manufacturing both at the vehicle level as well as at the battery level in this facility. Soon after this deal was announced, Tesla, instead of, they are at 35 gigawatt hours of production right now at the Gigafactory, and soon after this deal was announced, Tesla announced that instead of trying to build Gigafactories elsewhere to prevent replication of its own technology, Tesla has decided to push the production that they'll do in the Nevada facility to 120 gigawatt hours over the next 3 or 4 years to address sort of increasing demand for batteries. So, we'll see if there's ever a Chinese sort of battery solution built. But one of the sort of backup ways this might get done is that Panasonic is actually building in China, and so are some other battery manufacturers. So if Tesla does not want to build its own batteries, they could source from partners like Panasonic, with whom they already have working relationships, and not have all of their technology at risk of being replicated by Chinese competitors. And then sort of the final analysis of this whole thing is the fact that right now, evidently there's kind of chaos in China, because as you have EV companies that have sprung up in different cities, you have different charging units and standards, et cetera, that have been set up. And I believe that the Chinese are really trying to find sort of a best of breed to standardize on. That way, they can build an infrastructure that's well thought out, that works long term, rather than something that's going to be sort of fly by night, built, disappear because of lack of quality or careful thought of production. So hats off to Tesla for being on the road to getting the Shanghai facility open. I believe it'll open by June of this year, because the Chinese government is determined to make rapid progress. The second thing, in general, I'm still kind of stunned that you could have 24 companies, including BYD, already in China, but the government recognizing the need to get the best quality in the space to show the way on how to manage this area well going into the future. So, I'm looking forward to how this plays out. I do believe that with the low cost of entry that Tesla has, it'll be nice to see a growth in unit count of vehicles produced without a lot of capital being expended, and it has more of an impact on the planet, as is the agenda of the project to begin with. The next thing that we wanted to sort of dive into today is the fact that we're nearing the end of the quarter, and Elon and tech company have come up with a number of ways to try to juice sales. The latest one I was kind of impressed by, which is the tax credit is scheduled to be cut in half as of the end of this year, and Elon has agreed that if there's a good faith effort to purchase the car before the end of the year, Tesla will simply eat the difference between the 2018 tax credit and the one that's cut in half in January of 2019. So I think this is good news for those of you who've for some reason been delayed. Hopefully you can snag your car and get a nice discount off it as well. I have to admit though that there's a question mark that's lurking, which is, Tesla's been breaking all kinds of records to arrive at a certain production number, and they seem to have achieved that, or at least a decent number in the 6,000 to 7,000 units a week zone currently. And so as we've gotten through this pressure period, do they try to maintain those production numbers in order to address what's going to happen as we go forward with more production that's due for Europe and China? The other question that's lurking out there is the number of people that have actually been waiting on their, that are now taking reservations, and how long they're going to have to wait based on realistic production numbers. And, the shortage of batteries has also affected sort of the home charging units as well. So there are a whole bunch of what happens next questions regarding Tesla and their production that's going to go on in the near term. So we're looking forward to answer on all these, stay tuned, I would say is the answer. Greetings, everyone. This is a continuation of the earlier video. As you can see, our backgrounds have changed, etc. What I decided to do was end that video to kind of see what happened in the marketplace relative to Tesla's stock price after the announcement that Elon Musk was going to match, was going to do a eat the loss if in fact you did not get your EV tax credit. So the response for the market was the stock price actually fell $20, or like 3 or 4% in the process. So it's quite clear that the market believes that if Elon is trying to get the last sales of vehicles at the end of 2018 by heavily discounting the vehicle and potentially taking a loss on the cars being sold, it's a sign that Tesla may be in trouble when it comes to the production and sales numbers. I actually don't believe this is the case. I think that Elon has just decided that he wants to get a W and is therefore, doing this. But until we see the numbers from Tesla, I think the negative news is going to weigh on the stock until we hear or see different from either well-informed insiders or the company as we close out at the end of the year. Now, this brings up an interesting point, and it brings up an interesting sort of process that goes on with options. And the idea it introduces is something that's called a straddle. So, as we've discussed previously in our options class, there's a concept called a put and there's a concept called a call. In the case of calls, you're in essence estimating that the stock price of the company will rise. In the case of a put, you're estimating that the stock price will fall. So in the case of a straddle, it's possible that you buy both. So in the case of Tesla, Tesla is an excellent company to trade options on because it has what's called a high delta. The stock price moves around a great deal. Now, just for giggles here, Tesla's kind of in a trading range between about 370 and about 270 right now. So for giggles on options in this case, if you in fact you had bought, let's say, a 370 call and a 360 put, that would have been a straddle. So what would have happened over the last 3 weeks is that the value of your call would be headed down towards zero, but the value of the put would actually rise enough to cover all the losses you incurred on the call, as well as giving you a nice profit on the put. So for those of you who are well informed, want to do some research, understand ideas that could make you a great deal of money, I want to highly encourage you, recommend that you read up on a concept called straddles, because Tesla's stock price tends to move very rapidly long distances, and doing straddles on Tesla, I think, would be an excellent way to make money. And all you have to do is back test your data against the amount of movement the stock has had over time, and I think you'll find that learning about straddles and learning how to implement them could be very lucrative. One example of a straddle that I would like to introduce that I think is interesting, and one can take things that you learn in one area and bring it over to the other, is kind of what's happening with oil prices right now. So basically, the U.S. barrel is selling for about $42 a barrel. It's December 25th, Christmas right now. Now, what's interesting about this is that there's an approximate $50 a barrel where the folks at $50 a barrel, in theory, is the break-even point for people who do what's called fracking. And fracking is the sort of the largest increase in oil production in the United States. So one of the question marks that pops up is, why is that so what should be happening right now is as oil prices fall, you have a problem happening where frackers are stuck in this position where the price of oil is below what their costs are. One of the reasons why, in theory, oil prices could hold out at the current level or go lower is the fact that there are a number of people who are fracking entities that will actually hedge or do a straddle against oil prices. So, for example, when prices were at $55 or $60, if in fact you're a fracker and you know your cost is $50, what you can actually do is buy puts at 50. So what starts to happen is that as the price of oil starts to decline, you now have a great position because you've straddled or hedged your way so that while oil prices continue down, you're able to still pump oil, and with the money you're getting off of your straddle, you're able to make a profit while still pumping and producing and selling oil because of the hedge you put in place on the way down. So because of this, we actually could end up with oil prices in the 35-ish range and then, you know, sort of sit there a bit and then move forward, because usually when people do these hedges or insurance situations, it's usually about a year-long hedge that's been put in place. And the reason it's about a year is because when you go beyond certain time points, the cost of that insurance becomes so high that it's low likelihood people would go that far. And so hence, this is why I believe oil prices continue lower, and about a year from now is when they'll sort of bottom out and start rising again, because there'll be a number of producers who can no longer stomach the low prices that they're getting for their oil. Now, in places like Canada, Calgary, etc., they've already shut down production because, you know, their costs from the oil sands are heading towards $60 a barrel. So while they may have done some hedging, the numbers are just the gap is too wide, and therefore they've had to stop drilling or suspend operations or lay off people, etc. So in general, what I wanted to introduce is the whole idea of a straddle and the fact that Tesla, I believe, and I'm not a registered rep, is an excellent company to straddle. Now, the stock price is down significantly. To be honest with you, I'm expecting a very strong move upward in the stock as we learn the production and sales numbers that Tesla enjoyed. But regardless of what happens up or down, I believe we're going to see a lot of volatility and a lot of change in Tesla's stock price over the near term. I should also note that Tesla is an interesting company to trade, and the reason is that there's a lot of distrust of Elon Musk by the marketplace. So any negative news that comes from the company or from others is embraced fully, whereas positive news tends not to be embraced as well. So sometimes the history of the company, either good or bad in terms of what they do, can big time influence what happens with the stock price, and I think that's definitely the case in terms of what's going on right now. Look forward to any and all your comments on this. I do think it's an interesting circumstance in terms of what's happening with Tesla and what the future might hold. You know, the final note I wanted to make is that without violating your rules about telling what you think is going to happen next, one suggestion is to simply look backwards on the stock in terms of what's occurred. So as you've seen, probably Elon Musk's announcement he might buy the company out pushed the stock price to 380. Then it was found out that it's not going to happen. Then the stock price went to 250. And then they came out with a profit in the last circumstance, and that forced the stock price higher. So as you can see, Tesla's the type of company whose stock price has a high delta or moves heavily in different directions in short periods of time, and this tends to be an excellent type of company to trade options on, hence worth the time to learn about straddles, and implementing them could be very lucrative and also protect you from losses. Again, looking forward to any and all comments. Remember, 20 leg lifts, a multivitamin would be good, a half-hour walk if you can. This is Greg for Teslafaninsight. Thanks for taking time out to watch. Tschüss, macht's gut, au revoir, lehitraot, choda hafez, ni hao ma, farvel, and enough respect. Have a great day, and thanks for joining us. And comments appreciated.